Hello and welcome to another edition of the Moving Iron Podcast. This podcast is proudly provided by Axon, helping dealers move more iron for almost 100 years. Find out more at axontire.com. Axon was started almost 100 years ago out of a passion for keeping agriculture moving. It's that same passion that drives them today. With a vision for a better experience for both farmer and dealer, they set out to create a better way to move more iron. When you partner with Axon, you get immediate access to a full range of products and solutions designed to meet the complex needs of today's grower. Axon carries all major brands and sizes of tires, wheels, and tracks. From custom colors and sizes to fully customized wheels, you can have the solution for virtually any problem today's farmer is trying to solve. To find more or become an Axon dealer, please visit axontire.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to the Moving Iron Podcast Markets with Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com and tractorzoom delivering insights. No more important time than now to pay attention to what's going on in the auction market. And if you're not paying attention to what's going on there, you really need to start paying attention because you have an opportunity to lose a lot of money when these markets decide to change and go south and brings the value of equipment down with them. So make sure you're paying attention to what's going on there, and no better place to do that than Iron Comps by TractorZoom. And if you decide to move forward with your Iron Comps subscription, you can get a discount at checkout when you use Moving Iron. Chip Nellinger is with Blue Reef Agri-Marketing out of Morton, Illinois. And Chip is nice enough to come on once a week to talk about what's going on in the marketplace. And I'll tell you what, Chip, there has been a crazy week. You kind of called it last Friday when we talked. You said, after these markets open back up on Tuesday, or on Monday or Tuesday, they're either going to go way up or way down, and they went way down. And you take a look at what happened with the soybean market. They lost about $1 on Tuesday, and corn was down about 40, and corn's not quite rebounded from that yet, but soybeans sure have kind of come up a little bit. So I guess, what's your reaction to what's going on in the market right now?
Yeah, it's a very interesting market we've got. So the change from Friday going home ahead of the 4th of July to Tuesday was some added rain for really right now. And, as we speak, there's a little bit of rain moving through parts of Iowa. It's not a very big general system. They're supposed to get more into tomorrow, possibly across some of the drier areas of the Dakotas and Minnesota. So there has been a little bit of rain in some of the driest areas. It hasn't, if you look at a map where the inch plus rains have been, it's not very widespread yet. But when it's July and there's rain on the radar, the corn market does not take that very well. And so we came in Tuesday, the forecast was wetter than it looked going home Friday. You mentioned it, corn limit down, beans almost limit down, 93.5 cents lower. Beans are holding up a little bit better than corn. There's just a lot of stuff in my mind that isn't making a lot of sense. That the corn market is kind of in a shoot first, ask questions later type of a phase here, meaning the forecast a little bit wetter. Has been some rain around. It's raining right now in parts of Iowa. They very much need that rain where it's falling. But the market just assumes we've got this massive crop coming. Then you have the crop condition report that came out Tuesday after the close, unchanged in corn. That was expected. We dropped 1% in beans, and the North and South Dakota bean crop, as well as Minnesota bean crop, is very bad shape according to the crop conditions. North Dakota beans rated worst on record. South Dakota is the second worst on record. So that gave a little bit of more underlying support to the bean market, but it doesn't make a lot of sense, right? When you think about it, it's like, all right, if the beans are in that bad of shape, they plant corn and beans in the same area, how is corn not, right? And it just makes you wonder, like, what's going on a little bit. But corn is in for a bad week here. We're 60 plus cents lower on the week. Beans are holding up a little bit better, not quite that bad, but we got a crop report Monday. There's a lot of things still in this market. It feels like corn's going to zero and we're never coming back. But yet, if you really analyze where the rain has fallen so far, there's still a lot of dry areas out there. And it's not like, they have a lot more time on this corn to just wait it out and get rain. So there's still plenty of areas, it looks to me, across, northern Iowa, Minnesota, the Dakotas, that are going to kind of be shortchanged by this thing. The market's going to look at that Sunday night, Monday, check that forecast to see, is there follow-up additional rains? There's some hinting here at the extended forecast that this high-pressure ridge that's kind of been, over the Pacific Northwest and the Rocky Mountain area is going to move east, maybe into Colorado. That's going to push, Kansas, Nebraska into the cooker and warm things up in the Dakotas and Iowa as well. That's not a welcome sight if that happens into the last half of July here. So we're not to the finish line yet, although the corn market is acting like, we have a record crop in the bag here. And I don't think we do. I think it's a little premature. And we got quite a bit of growing season left to play out here before you can safely say we've got trendline yields in the bin. So a lot to go here, but right now we're working on a pretty ugly week. Added rainfall and a lot of selling, but we'll see, Casey. I'm not convinced yet. We've seen the highs in either corn or beans yet. I think the next 4, 5, 6 weeks are going to tell more of the tale. And one rain out there, an inch of rain, that might get this corn in the Western Corn Belt to pollination and tassel, but you're going to need follow-up rains to kind of fill this thing out, and that's a critical reproductive period as well. You can lose 20, 30 bushels at grain fill off the top if it's warm and dry. So we got a long way to go here, but the market's acting like record yields are in the bag right now, so a little bit confusing.
Yeah, yeah. There's just because it rains doesn't mean it's going to be it's going to fix every problem that's out there. There's plenty of, like you said, plenty of growing season left to go here. So keep your eye on the ball there, folks. I don't think that this is going to, like you said before, Chip, this volatility stuff is just going to continue to be huge swings based on every tweet or piece of news or rain forecast, whatever that might look like. It's almost like a knee-jerk reaction sometimes. It goes like for soybeans to swing $1 in a day and then come back and then swing back another $1 in a day. It's just everyone is just so glued to what's being said out there that they get lost sometimes, I think, in the shuffle.
Yeah, and the volatility is going to continue, like you said. You look at a pull bean chart up, and you look at these days where you have a 35-cent range, and it looks like a real small, quiet day because there's been multiple days here in the last couple of months where you move 80, 90 cents. In fact, the 20-day average range from low to high in beans is 48.75 cents. So that's just an average day is almost a 50-cent swing now from low to high in beans. And I think the other thing that's a little bit exaggerating this move is every year, throw this year out, but every year you get to this time frame on the calendar and our exports are kind of, it's not the high point seasonally for exports. And that's the other thing is China's been a little bit quiet in here recently. I think the market's a little concerned about that. Every big break that you have, like, we're 90 cents lower the other day in beans, and you kind of get the rumors about, how China's snooping around, they're going to buy beans. There's been no confirmation of that yet, but I think that's the other thing that's allowed this sell-off to get a little bit deeper. I think that's totally normal. I think as you get into, August, September, October, those exports should pick up. We're still shipping out a lot. on a weekly basis. So they're taking what they have purchased. There's been no cancellations. But I think the fact that China's not been a big headline buyer here the last couple of weeks has spooked the market a little bit. But that's just something we're going to, for the foreseeable future, many years to come, that's going to be something the market deals with. Is China buying? How much? Are they done buying? Are they going to buy more? I think that's just typical, and that's what drives some of this volatility too. But right now, they've been a little bit quiet. But that should be picking up, because the other thing the market seems to have been ignoring is the Brazil corn crop. They had 3 freezes in a row there, hard freezes.
Yeah.
Took anywhere from another 3 to 5+ million metric tons off of that crop that was already hurt by drought. Parts of the Ukraine are starting to get dry. And, that just means more export business for us until South America has another crop. And that's, 8-9 months out. So I think that things could take on a little different tone once you get deeper into summer here and start seeing these exports pick up like they normally seasonally do, kind of in that August, September, October timeframe. And then it's about crop size. And I really still believe that this market doesn't quite grasp how dry it's been in the West and for how long. And, one rain doesn't fix that. In fact, that from, and I'm not an agronomist, so don't hold me to this, but the most water use for a corn plant is from tassel to black layer. And so, sure, one rain here is going to be great if they get 2 inches. That's a big sigh of relief, but it better keep raining. Once you get to tassel and beyond, the plant requires a lot more moisture and to fill that kernel out. And so we're far from the finish line. If this is a baseball game, we're about the 4th inning, maybe 5th inning, and we got a ways to go before this game is won.
Yep. Yeah, there's a lot of time left. A lot of time left out there. So, all right, let's talk about a couple things real quick. You kind of brought it up here a little bit when you were talking about Chinese and export. The U.S. dollar still continues to struggle a little bit to the lower side of things, and there's not a lot out there to be exported right now, no matter where you're at in the world. But China is still, irregardless of price, irregardless of what's going on out there, they are still trying to buy, irregardless of what they say. I read an article today, they were going to plant 6% more corn, and they were talking like a 15% increase over last year's crop in China, which, whatever. But they're still just buying as much stuff as they can, at least snooping around for as much stuff as they can. What are your thoughts about exports moving forward and how the U.S. dollar plays into that?
Well, the dollar has rallied a little bit off of the lows from a few weeks ago, and it's at kind of a critical point, I think. So it's kind of pausing here. It's backed off the last couple days. I think it's really at a critical point. If you see much more strength in the next week or two, like above this week's highs in the dollar, that might propel us quite a bit higher, and that obviously is not good from an export standpoint. China, it's almost like they have inelastic demand, meaning, they need it. It doesn't matter to them necessarily what the dollar is. If corn's at $3 or $7, they need it, right? They got people to feed, they've got animals to feed. And obviously they are going to try to be self-sufficient and grow as big a crops as possible. The government's kind of subsidizing that and trying to incentivize their farmers to do that. But I think there's still, when you have 3 billion people and several 100 million hogs, that's a lot of demand right there. And so I don't know when or if they'll ever be fully self-sufficient, but it's not going to be within the next year or two. So they're gonna be there in some respects. you know, lying in the weeds, so to speak, to buy all kinds of products. And I think that is, irregardless of what the dollar does. Now, the dollar, other normal customers, the dollar matters, and supply matters, right? That's the other thing is the basis levels, cash bean basis levels are creeping higher in Brazil, meaning they're probably about out of supplies. It's seasonally right on time. When you talk about corn, depending on this crop size in Brazil, they're going to export some, but it's certainly not going to be, a lot of people now are talking that Brazil crop's going to be in the mid 80s. And, 2 months ago, that was 100 million tons or more. And so all that business that they would have exported is going to come to us. And so for a little bit here, the dollar doesn't matter a lot because the stocks are so tight. Now, depending on the crop size we raise, you fast forward and then you get into winter, and this time next year, South America has another crop. Then I think it's much more important. But right now, due to the tightness of bean stocks and the tightness of corn stocks, some of the vegetable oil shortfalls that we have in the world, for a period of time that the dollar may not matter as much as it normally does, but it is at a critical point, I think, on the chart. It's either like, all right, it's a correction in a longer term bear market in the dollar, or it's just the bottoms in and we're starting into a bigger rally here. And obviously, we've seen some big fluctuations in interest rates, in some of the metals markets. The stock market's getting a little more volatile. So some of these are tied together in the financial world, but it just, everything's interrelated anymore. And some days you see beans higher, corn. It has nothing to do with fundamentals. Sometimes it has all to do with outside markets. So it's definitely something to watch over the next 6 to 9 months, this dollar. In a very short run, I think, due to the tightness, it almost doesn't matter. People want corn in the next 6 months. They're going to get it from the United States, or they're not going to get it at all because it's that tight in the world.
Yeah. Yeah. That's what I'm thinking about too, is just, it's not so much just what's happened in the US, but everywhere in the world, overall stocks are just tight, period. Whether it's wheat or corn or beans or whatever it might be, there's no lack of demand for the lack of supply. You know what I mean? So it's just purely is a global market right now, and we're starting to see that. All right, so let's take a look at what's going on over here in the livestock markets. Cattle prices still struggling. You see some hog prices are getting some pressure right now, especially when you start looking at on the cattle side, the actual wholesale box beef prices and what those have done. So talk about, especially on the beef side of the business, what you see there and kind of what your reaction is to what we see this slide in price.
Yeah, that's a real hot button right now. Box beef has come fairly sharply lower over the last 3 weeks or so. The cash cattle market has held together, and this is the sticking point and the big talking point in the industry right now is even though box beef has come down quite a bit, packer margins are still phenomenal. They were record, I don't know, $800-900 a head is what they were. And even though box beef has come down some, there's still really good, historically very strong margins for the packers. And so that's the big push right now is how do we, get more competition amongst, kind of a freer market, so to speak, so that we can kind of get better, more open cash markets. So that's been a little bit tough. The cash cattle market has held together. It's slowly trended higher the last few weeks, but grudgingly, steady and then up a buck and then steady, and it's held together. And it's all a margin business. But right now, the packers are still making good money on the beef side. Box beef has come down quite a bit. I think you are with some of this heat that's been around. I think way better things are coming I think, to the cattle market, a year out because of the drought. The drought has shifted cattle numbers, and meaning we've killed a tremendous amount of cows, and that's been something that's pressured things, right? Because that increases supply for a short period of time, because you're not retaining those cows and heifers. You're getting them into the meat, and so that increases supply a little bit. But this drought is a bad deal, and heifers that would have been retained, they're getting fed out and slaughtered. And so that's been a little bit of a drag here in the short run. But I mean, the numbers are big, historically big. So a year out from this, the numbers are going to shrink way back. And that's what we've been fighting for a while, is just record numbers of cattle on feed for a while, the last year or so. That's going to start shrinking. Things are going to get, I think, better way out ahead of us. But right now, it's been a tough road, especially with these higher corn prices. In the Southwest, Texas Panhandle, Oklahoma, you had $8 cash corn there for a period of time towards the highs, and it's been a rough go for these feedlots. But I think brighter things are coming, maybe sooner rather than later. But I think the drought really we're gonna see long-term effects from the cow slaughter from this drought that we've been fighting, and is not over yet, by the way. And that means probably better things out there for the feedlot. Unfortunately, the cow-calf guy is that is the dark cloud right now of maybe the whole economy is the cow-calf guy because of this drought. But that'll mean better things for the feedlot here out 9 months to a year. I think I really do.
Yeah. Yeah, a lot of moving parts out there, man. Like you talked about, the volatility that's in place, the need for a plan is more important than ever. And I guess, Chip, as you sit there and you look around, what's going on when you're talking with a customer? What's that first step that you kind of have them start going down when they're looking at the plan that they have in place, and what kind of movements they need to start looking at?
Yeah, costs and gross revenue are first and foremost. It's a little bit easier for the feedlot side than it is the row crop side. The row crop side, generally speaking, the cost structure a lot of times isn't fully fleshed out. People know what seed, nitrogen, fertilizer costs, but it's hard to get all those other costs, labor, interest, all that stuff. It's a little bit easier on the feedlot side, but gross revenue is the big thing. Where we're at currently, the other hard part is from a row crop side. I mean, you just look at for example, somebody here in Central Illinois is looking, if it doesn't get too hot in August and we get another rain or two, best ever type potential. And then you have people, in the Western Corn Belt and the Dakotas saying, yeah, I don't know why corn isn't $8 already, right? I mean, we might have the worst crop ever. And so that's a big part of this too, because you don't know going in what's my yield going to be. On the feedlot side, you're going to have a little death loss, and your feed conversion rate and feed costs might fluctuate a little bit, but for the most part, you're going to start feeding a 750-pound steer, and you're going to, sell a 1,450-pound steer, and you kind of know that. It's different, if you're going to raise 120 bushel corn or 280 bushel corn, makes a big difference, and that's part of the uncertainty and the stress that's there on the row crop side. But it starts with gross revenue, and then it looks at, okay, where are we at in this thing? How can we start locking some of that in at profitable levels? And what strategies are available to lock that in and potentially keep the top side open? And there's a lot to it, and it's stressful. And the thing about it is, there's these bigger operations. Just there's so many balls in the air that they're juggling. They don't have time to worry about the markets and the business side, right? That's kind of the important but not urgent, and there's urgent things, right? Like planting the crop, spraying, harvest. You can't wait on that stuff. You can always wait on the markets and the business side, and unfortunately that sometimes costs a lot of money waiting on that and not focusing on that.
Yep. Yeah, so good stuff there, Chip. If folks want to reach out to you and get help with that first step, kind of figuring out how to get down that path, what's the best way for them to get a hold of you and the folks at Blue Reef?
Yeah, best way is just call our office, 309-550-7213. We'd love to talk to you. Not high pressure at all. Just give us a call if you got any questions, or just want to double check on what, whether your plan makes sense and how you might improve it.
Thanks for being on the podcast, Chip.
You bet, Casey. Have a great weekend. It's going to be interesting next week as well. This weather isn't done. This weather market is not done. So we're going to be seeing a lot more volatility ahead.
I think we're in it through harvest for sure. If not into planting too, feels like. So I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you're going to find the latest editions of the Moving Iron Podcast. Also, go to MovingIronLLC.com, and that's where you're going to find the entire library of the Moving Iron Podcast, as well as information for the Moving Iron Summit coming up in Nashville, Tennessee, in September 15th through the 17th. All the information you need for that will be at MovingIronLLC.com. Up the navigation bar, click on the Moving Iron Summit, and you'll be able to see agendas, how you register for the event, hotel information, speaker bios, all this fun stuff. So if you need more information about that, send me an email at MovingIronPodcast@MovingIronPodcast.com, and I'll be happy to get back to you with whatever information you're looking for. So with that, I am Casey Seymour with Chip Nellinger. Let's go move some iron, folks. Out.
You want to have a meaningful competitive advantage to help sell more equipment. Whether you represent the sales, parts, or management department of an implement dealership, there's a surprising amount of complexity when it comes to tire, wheel, and track technology. Let Axon worry about that so you can get back to supporting your customers. Axon has leveraged years of experience to create a streamlined process that gives you a proven path to help today's grower and sell more equipment. The roots of their organization go back almost 100 years to the invention of the rubber tractor tire. Supporting agriculture is the number one driver of Axon, from product development through sales and service. To find more or become an Axon dealer, head over to agmarkets.com.
Moving higher in the 21st century. Hard work